This is Spencer with Numbers Up Finance. Today we've got a very brief market outlook for Thursday, January 10th. And starting off, we've got the charts for the ticker SPY, it's the S&P 500 ETF. Very short, my outlook. If you are an active trader, the next couple of days, the risk to reward ratio is very much so in favor of if you're long now, certainly selling. And if you're trying to do an active trade, I would definitely lean towards going short rather than long right now. But let's get into the chart. So here we've got the 4-hour chart for SPY. And the thing that I want to point out on this chart is this resistance zone that we have here. A very significant resistance zone, and it's on all the indexes. I'll show you that in a minute. But you can see the dashed lines and the solid line. Everything from right about 255 up to 262, which is this top line. But there's a lot of resistance right now that we're reaching and actually going a little bit into right now on the major indices. And so you can see these dotted lines, they're just the out boundaries of this very thick resistance zone. On SPY, it's very nice at 255. We've got the double bottom there that we crossed by. We've got a couple reaction points along this line, more so near term. And then this is the very upmost line that I have for this resistance zone. And basically, this is the zone where sellers are going to step in. We were very overextended to the downside on all of the major indices. And we got a very large snapback, and we weren't quite as overextended as we were down. We were down 13% on SPY, and we're back up about 10 or 11%. But 10 or 11% over the course of that short time frame is an incredibly large amount. And so just how we were expecting a snapback towards the upside, I'm expecting some extent of a snapback to the downside. Now, I don't think it's going to be as large as this. I'm not sure if it's going to be 10 or 11% like this snapback was. And it might also not be nearly as quick as what this was. This was over the course of maybe a week and a half, 2 weeks. I'm not exactly sure. Yeah, it was about 2 weeks, give or take a couple days. It was a very, very impulsive snapback that we got here. And I'm again, I already mentioned it, but I'm expecting a snapback to the downside. We might not get it tomorrow. We don't have any clear buy signals yet, which is what I'm waiting for to go short. But I would certainly be closing out my long positions now just due to the risk-to-reward ratio. We have very little upside. We have a ton of overhead resistance right now on all the charts. And maybe we do break through it. And if that happens, that's great, and I'll adjust my strategies to it. But I don't think it's very likely. Let me pull up the charts for QQQ real quick. So on QQQ, I have very similar notations with a very similar resistance zone that we're in. And you can see the reactions back here at the bottom. There's this middle line that I have. Pardon me. Right now we're at the very top of this resistance zone that I have here. And you can see there's reactions back here. Also important to note, on QQQ, we're right at this 200 SMA, that I have. It's the thick blue line, which you can see even recently it's been tagging it and bouncing down pretty quickly. You can see that we're in a downtrend. When we're in an uptrend, it holds pretty well support. Now we're in a very clear downtrend for the past couple months. I would expect it to hold the support. We're also at price level support, moving average support. We're overextended to the overbought side. Sorry. There's a lot of stuff right now that's saying that there's going to be a pending couple of days at the very least that is going to be towards the downside. And so I already mentioned it, but we don't quite have a clear buy signal yet. The expected value or the risk reward that we're looking at right now is very favorable for the shorts, but it would be catching a rising knife in this case, in this instance. And some people are comfortable with doing that. I think it would be very appropriate to go short right now and have a very tight stop loss just above in this case for if you're shorting. I'm personally not going to do that. I have a much lower risk tolerance, so I like to see some signs of reversal before I actually buy or sell into a position. And so what exactly would be a buy signal for me, or a sell signal in this case? We're continuing this uptrend on the daily chart. You can see the candle, we started off with very impulsive candles up. We had a little bit of a pullback, and then we kept going up. But you can see these candles are really starting to get less and less and less impulsive. The volume is also decreasing as we go down, which is a clear sign that buyers are starting to fade out of the market. And these resistance levels tell me that at some point pretty soon the sellers are going to step in. And so what that would look like, perhaps tomorrow or Friday we get a nice bearish engulfing candle where maybe we gap up tomorrow with the futures, but then we fade it throughout the day. That would be a very clear, clean-cut sell signal for me. That's where I would get into my position for shorts. And now, again, this is just me. This is how I would play it. You have to be your own independent trader, but that's the kind of thing that I would be looking for. Also, it's important to note, let's look at the futures right now. On the futures, let me go to, there we go. So this is the 90-day 1 hour charts. We've got very nice bearish divergences right now. The prices keep making higher highs, and the momentum is very much so pointing downwards, both on the RSI and the MACD. And you can also see this is true with the QQQ futures, or pardon me, the NASDAQ 100 futures. But you can see higher highs, momentum very clearly towards the downside. I'm not exactly sure what target I would aim for. Let me pull back up the main QQQ charts. It's hard to say how far down this could go. This might be the next leg down, or it might just be a little rip in a medium-term bullish trend, right? So perhaps we just come down, backtest this previous low, or maybe even undercut it or overcut it just by a little bit, and then we start reversing and heading back up again. It's hard to say. It'll be something that I have to, you have to monitor, the volume and the price action as we go for this specific case. But right now it is very favorable to be exiting out of your long positions, in my opinion, and it would also be keep an eye on the market. At some point soon, there's going to be a reversal towards the downside, and if you're quick on your feet, you can make some money. And so I'm just going to leave this wrap here real quick. I just wanted to put this out before tomorrow. If you like this video, be sure to like, comment, subscribe. This has been Spencer with Numbers Up Finance. I hope you all have a good one.